We have plenty of market news that's come in already today that's going to be coming up later, and a lot of news coming up tomorrow. So we're going to be going over all that in today's video. Let's go ahead and get to it. This morning, major U.S. stock indexes retreated from Tuesday's tech-driven gains in overnight trading as Treasury yields and crude oil ticked higher. Mega caps climbed earlier this morning's session, began to slide just as before the opening bell, and that could help set the tone as it did yesterday. Warmer than expected February Consumer Price Index. Tuesday wasn't ideal, but didn't really stop a rally to new all-time highs for major U.S. indexes after 2 days of backpedaling. The gains came despite Treasury yields popping to one-week highs and fresh worries about the Federal Reserve's anticipated rate cuts and poor demand in 10-year auction. So CPI is Exhibit A in a packed U.S. data week. Thursday morning features February Producer Price Index, PPI, data along with February retail sales. Things will be wrapping up on Friday with preliminary March University of Michigan Consumer Sentiment report. So we're going to be watching that. Futures based on S&P 500 fell 0.06 shortly before the close of overnight trading. Futures based on the Dow Jones Industrial Average rose 0.03%. Futures based on the NASDAQ slipped 3%, or 0.3%, excuse me. So 10-year U.S. Treasury yield rose 3 basis points to 4.19%, a one-week high. The U.S. dollar index climbed to 102.92. The CBOE Volatility Index fell to 13.78, a one-week low. Crude oil was up 1.7% actually today. It's now at $78.89 per barrel after a larger-than-expected U.S. supply drop. Bitcoin climbed 1.5% to around $72,600 per coin. The U.S. Treasury market is under scrutiny today after soft demand and a closely watched 10-year Treasury note auction yesterday. An auction of U.S. 30-year bonds is on tap today. Weaker demand leads to rising yields. So we're going to have those rising yields because nobody's wanting these new notes. So, CPI unwrapped. Though Tuesday's CPI report didn't show much progress on prices, the market's initial muted reaction could suggest investors welcome any progress, even though it's very light. Very light. Slower growth in owner's equivalent rent, or OER, and food prices likely muted the market's reaction to disappointing headline progress. Also consider that January and February price growth can be seasonally weighted upward as prices generally rise to start the year. The bull thesis is that it will flatten out by March and April, leading to the smaller monthly growth. But that is remaining to be seen. We're not sure yet. It's just a general thesis. Not everyone is convinced we're going to be through the worst of the housing inflation as of yet. Owner's equivalent rent was still relatively strong at 0.4% month over month in February, so we'll still be watching that. It's going to be straightened out. There could be corrections just as we had the other day. January retail sales were weak due to chilly winter weather across the country that month. Analysts expect a February rebound to 0.7% monthly growth and the negative 0.8% reading in January. Keep in mind that February 2024 had one extra day due to leap year, and the report doesn't adjust for that. It's kind of interesting they don't adjust for that. It's something you'd think they'll do. We'll see how that affects anything. Looking ahead to PPI, the average forecast is for 0.3% headline growth and 0.2% core growth versus 0.3% and 0.5% respectively in January. Annual core PPI is seen up 1.9%, and that's down from 2% in January and below the Fed's 2% target. So that's good. For the consensus claims, consensus up 218,000, and that's initial jobless claims. It's just up a little bit from 217,000 the prior week, so it's not much of a change. The more interesting data point might be continuing claims, which rose above 1.9 million recently for the first time in several months, potentially indicating that jobs are harder to find once people become unemployed. Looking overseas, European stocks rose slightly early Wednesday despite reports showing the Eurozone's January industrial production fell 3.2% from the prior month, well below expectations of 1.8%. On the other side of the world, anticipation grows ahead of next week's Bank of Japan BOJ meeting as investors wait word on whether policymakers are closer to any negative rates. Analysts don't expect policy to change this next week, though. It's just not looking like it. So, stocks on the move today. One of the things I've been working on and I put in an order for, we'll see if it fills, Dollar Tree. I have never been to Dollar Tree until I was hanging out with my best friend, and we go to Dollar Tree now whenever we can. It slipped over 7% in pre-market trading. And now, later in the day, it is actually, Dollar Tree is down 14%. It's down $21.25 at this moment, which is insane. That's ridiculous. I put an order. I'm hoping to grab some. So we're going to see what it does. So it's down 7% in pre-market earlier, down 14% right now, getting close to the close. The earnings per share fell short of analyst expectations, also released weaker than expected quarter one earnings per share guidance. Overall, same store sales across the chain rose about 3%, but average customer spending declined 1.5%. So you're having the same customers going in there, they're just not spending as much. And that's why it's dropping. If you have the same amount of customers going in and you're just not spending as much, you're not growing the amount of customers and you're not growing the amount that's being spent inside the store. This continued a softening spending trend note in the previous quarter as the discount retailer Dollar Tree also announced plans to close nearly 970 of its Family Dollar stores. So it does have several different chains. It has Family Dollar, Dollar Tree, and there's one other, I just can't remember it offhand. So that one's definitely something to watch. I'm not sure if I get something now. I'm still thinking it might go down in aftermarket tonight, pre-market tomorrow, regulation tomorrow. We'll see what it does. If it keeps going down, I'm going to buy some more, even though it doesn't have dividends, which I'm really bummed about. Dollar General should be coming up tomorrow. I believe it's tomorrow. And I already own shares of that. I'm still up for that. It was trading in sympathy with Dollar Tree today. It was down a little bit. Fine by me. I'm still making good profits, still making good dividends. Hopefully Dollar Tree will rise once everyone gets over this little drop. I don't think it's going to be too bad. So yesterday, kind of review, chip makers bounced back, helped by the Philadelphia Semiconductor Index. That's the SOX, if you're looking up the ticker symbol. It was more than 2% as it recovered part of a 5% drop the previous two trading days. Industry leader Nvidia, ticker NVDA, jumped more than 7%. Consumer discretionary and communication services shares were also among the strongest areas. Regional banks and real estate were among the weakest sectors, though, as the CPI data spurred an upturn in treasury yields. Tuesday's rally came in on a lower than average volume, which may raise questions about the conviction behind it. And what that really means is, yes, it was a great day, but there wasn't a lot of people getting in it. It may have been some really wealthy investors or some institutions, but it wasn't everyone. It wasn't everyone doing it. It wasn't everyone being excited. So that's why it's kind of being questioned about the market. Yes, it was a rally, but it wasn't everyone. It was just a portion. And so that's why it's kind of on shaky ground. So kind of thinking about that, we're going to be looking at Nasdaq Composite. Evidence that the rising index price didn't lift the mandatory majority of the votes there. Breadth remains on an issue of the Nasdaq, with less than 50% of stocks there recently trading above their 50-day moving average. That's something we watch, is moving averages. So just keep an eye on it. We're also keeping an eye on the Fed. Early today, futures trading pegged chances at 99% of chance of the Federal Open Market Committee, FOMC, leaving rates unchanged at the March 19th, 20th meeting. We were talking about this the other day, so nothing much has changed. Market prices in around a 10% chance the funds rate will be lower than now after the Fed's May meeting. Chances rise to 65% of at least one cut by June, 84% by July. I've also been listening to some analysts earlier today that they don't think there's going to be any rate cuts this year. So it just depends on who you're listening to, what you're averaging in, whose percentage you're listening to. So we'll see. Now, we are going to be Also looking for Dollar General tomorrow. That'll be March 14th. Looking forward to Dollar General. If y'all are into makeup brands, Ulta, Beauty, they're going to be doing some stuff. I forgot if they have a dividend. I was going to look into that and I forgot. So I apologize. We'll be looking at that tomorrow. But Dollar General, we'll see if they're going to have something similar to Dollar Tree. Granted, Dollar Tree down a lot today. Dollar General down a little bit, trading in sympathy. Not complete sympathy because it was only down a little bit. We're going to see what they come out with for their earnings. It's going to be very interesting. But also, we don't want to forget February PPI and core PPI, along with February retail sales coming out tomorrow. We're going to be looking into that. That's going to relate directly to Dollar Tree and Dollar General. So if we're getting in on those trades, we're going to be wanting to watch these reports tomorrow, or at least keep a live news feed on your phone. We're going to be watching it or get on it after market hours. So we're just going to be watching all that. So March 15th, February capacity utilization and industrial production, preliminary March University of Michigan consumer sentiment. That's the 15th. 19th, February housing starts and building permits. We're going to be watching reports on that. How's housing doing? So that's what we're going to be going up for. We're going to really be watching Dollar Tree and Dollar General. I want to buy Dollar Tree because it's dropped so much. I just want to get on the lower end of the day. Dollar General, definitely be watching that. I already own a decent amount. Going to see if I'm going to get more. If it goes up, might sell. We'll see. So I'll be seeing y'all tomorrow.